Discover is the only other major lender in the U.S. besides American Express that operates as its own payment network and a card issuer. This payment network allows Discover more freedom and revenue when it comes to credit processing over many card issuers like Bank of America, Chase, Citibank, and so on. It used to be you would see the card issuer's name on the top of the card with the payment network on the bottom. As cards become sleeker and appear to be going more digital, this conventional card style is becoming obsolete. Discover has come a long way since its Dawn of Discover commercial from the NFL's big game in 1986. Discover's beginnings stem from close ties with retail merchant Sears. Dean Witter Financial Services was a subsidiary of Sears at the time and was responsible for introducing the Discover card to Americans through its Dawn of Discover campaign. For those too young to know, Sears was a huge player not only in retail, but in other aspects of financial services. Sears acquired Dean Witter and real estate company Coldwell Banker in the early 80s to complement its other financial services, which already included insurance company Allstate. Sears was unable to keep many of these companies on its books and had to restructure the following decade. As a result, Dean Witter, which took over Discover from Sears, was spun off in 1993 and became a publicly traded company. Over the next decade, Discover continued to grow as it underwent some name changes and another merger, this time with Morgan Stanley in 1997, along with an acquisition of Greenwood Trust in 2000. However, it took a Supreme Court ruling in 2004 for Discover to make some serious headway in the credit payment world with rivals Visa and MasterCard's payment networks. Because of Discover's heavy affiliation with Sears back in the 80s, many competing retailers were still reluctant to accept Discover cards, fearing they'd be helping a subsidiary of competitor Sears by accepting Discover cards as payment. Most of this stemmed from unfounded claims made by payment rival companies Visa and MasterCard. But after the long-awaited antitrust ruling, many big-name retailers began accepting Discover as payment, which allowed Discover to flex its muscles with even more expansion into the payment services realm with acquisition of Pulse Payments Network. This allowed Discover to dive headfirst into the thriving debit card market that continues to target consumers like the underbanked and other younger consumers targeted by fresh fintech startups offering new ways into banking. In 2007, Morgan Stanley spun off Discover and its growing financial services into an independent publicly traded company. The timing was not so great for Discover, with the great financial crisis looming, but a sizable settlement stemming from the antitrust ruling in 2004 was now awarded to Discover from Visa and MasterCard for almost $3 billion. Keep in mind, this is 2007 money, which is worth like $2 quadrillion in 2021 money, but was still a drop in the bucket for bigger players like Visa and MasterCard. In looking at Discover's stock price performance over the years, you see that things were a bit rocky in the beginning, with shares in June 2007 having a brief spike from their initial $28 price to just over $32. After the short-lived rally, Discover, like many other financial companies, underwent a huge drop in price, falling from $32 in June 2007 all the way down to just $4 and change in March 2009. That's a tough pill for any investor to swallow, and predicting a bottom was difficult given what the Fed was doing to prevent the banking system from falling apart. For any investor who was brave enough to buy Discover in the first quarter of 2009, they could have ridden that rally all the way up to $66 and change just before Christmas 2014 and yielded returns between 665% to almost 1,400%. To put this in perspective, if you invested $30,000 at any point in the first quarter of 2009 with Discover, you would have enough money to buy a starter home in many markets across the U.S. in less than 6 years. Since 2014, Discover has been on a volatile ride, with its price peaking in July 2019 at just under $93, then dropping all the way down to $23 due to the unnamed crisis of 2020. However, since March 2020, Discover has rocketed back to near highs and sits in the low $90 range as of the date of this video. Discover's CEO has been quoted giving reasons for strong revenue expectations going forward, stemming from low employment, strong consumer sentiment, and strong retail spending. These were all quoted just before the coronal episode in March, so it'll be interesting to see where Discover stands at the end of 2021. Without lots of help from the Fed, I'm not sure Discover's prospects will be as positive as the CEO declared. In the years that followed the great financial crisis of 2008, Discover continued to grow and provide more financial services, including being the first lender to offer a free FICO score along with free credit monitoring to anyone, regardless if you have an account with Discover. Some of their credit products have been discontinued, but as of early 2021, here are all the credit cards offered by Discover. Their credit card portfolio isn't as expansive as other bigger lenders like Chase or American Express, but that doesn't make them any less appealing as a valuable tool in your wallet. For anyone new to credit or rebuilding credit, the Discover It secured card has always been one of the best cards due to its easier approval standards and ongoing rewards for consumer spend. Discover reports activity to all 3 credit bureaus. It provides the usual credit score and monitoring services, along with the perk many credit card churners love, which is the doubling of all rewards earned during the first year the account is opened. After every 8 months, Discover may allow a refund of the security deposit and convert the card to an unsecured card. Typical credit score approval ranges for this card are known to be 660 and below. In my experience, the most important things Discover wants to see are no significant derogatory marks like bankruptcies or judgments. Having a U.S. bank account and enough income to satisfy your standard of living will also help with approval. I won't focus on the business card since the criteria for approval is different than the personal cards. That leaves the cashback and miles cards from Discover. Both are unsecured cards, so no deposit is required. The credit score for approval starts around 660 and goes up from there. Again, income and a U.S. bank account will also help here, especially income. The reward structure for the cashback card revolves around rotating categories, as determined by Discover each quarter, and award 5% cash back on up to $1,500, then 1% beyond that, which matches the rate for all spending outside of Discover's assigned reward categories. Rewards on the miles cards are awarded at a flat rate of 1.5% for every dollar, regardless of category. Both cards offer rewards as cash, despite one saying miles, but both have other options in lieu of cash, which I'll go over shortly. Each card comes with Discover's annual match in rewards earned for the first year the account is opened. This was a huge benefit for many credit card churners that practiced manufactured spending back in the day. In fact, here's what Discover gave me back in the day for my first year. Over $500 of that came from me not even using my Discover card at all, because Discover used to have their Discover Deals shopping portal, similar to Chase's Ultimate Rewards portal. Again, those churners that remember the good old days of manufactured spending had a real sweet spot for Discover's outrageously high return of 5 to 10% for exploitable retailers like Staples, Sears, GameStop, and Bed Bath & Beyond, to name a few. Then Discover would double the cashback earned, even from spend not using their Discover card, because in my case, I went through their Discover Deals shopping portal, which rewarded me up to 20% many times on purchases for manufactured spending. The only reason I didn't go too heavy with Discover was fear of shutdown. However, I've seen friends with 5-figure rewards doubled by Discover back in the day. Sadly, Discover shut down their Discover Deals portal in October 2018. If you'd like to see a video on manufactured spending, just let me know in the comments. It's not what it used to be, and is much harder to do nowadays. But getting back to my point, Discover's annual reward match is not to be overlooked for serious spenders because it amounts to a flat 3% cash back for the miles version, which is an insane rate of return on a card with no annual fee. Again, even though this card says miles, it's actually a cashback card, and no airline miles are given. In fact, none of Discover's cards have annual fees. They also have a one-time fee forgiveness for late pays or return payments. You have 4 options to redeem your rewards. The gift card option offers an increased reward opportunity with extra bonuses applied to certain gift card merchants, which stretches the value of Discover's reward currency further. As an example, here's someone that spent $500 each quarter in Discover's rotating categories for the cashback version. At the end of their first year, they've got $100 in Discover rewards, and Discover doubles this amount to $200 due to their annual match. Our spender could redeem this $200 reward for 2 Foot Locker gift cards valued at $125 each by redeeming $100 of rewards for each Foot Locker gift card as shown here. So the 5% initial return on spend doubled to 10% from Discover's annual bonus match, then was increased through the gift card redemption option to 12.5% overall, which is an outstanding rate of return on credit card spend, provided you're able to find a suitable merchant within Discover's offerings. Another potential benefit that's unique to Discover is in what it calls cash over purchase transactions. This is unheard of with any other lender and a first from Discover. At most grocery chains, simply use your Discover card as usual and you'll be given an option for cash back, despite running the transaction as credit, not debit. Discover provides a list of stores on their website where this is allowed. The maximum cashback amount is $120 per 24-hour period, or whatever limit the store imposes, whichever is less. While you won't earn any cashback rewards on the cash out amount in the transaction, you still earn rewards on the goods and services bought from these merchants. Getting a cash out option on a credit transaction without incurring a cash advance fee is a first. When it comes to customer satisfaction, Discover has led the credit industry for years, according to J.D. Power. Discover provides American-based phone agents which are always available. I cannot stress how valuable this is when you have an issue. Customer service is usually outsourced to some country in Southern Asia, which is where most of American Express's customer service is based, along with many other lenders. For those younger consumers that prefer digital assistance, you can do almost anything within the Discover app or online as well. The few drawbacks of Discover are that it doesn't offer a lucrative sign-up bonus that other lenders provide. However, their bonuses have been slowly increasing over the years, with $50 appearing often. This bonus amount can increase to $100 or even $150 during certain promotional periods as determined by Discover. In my opinion, this isn't a drawback because the return for ongoing spend is competitive for the cashback version. The return on the miles version is very competitive for the first year, but is mediocre at best for subsequent years. Remember, all their cards have no annual fees compared to the big sign-up cards from other lenders with huge annual fees. Discover only allows consumers to have no more than 2 cards at any given time, if allowed. That first card must be open for at least a year before the second one can be applied for. That's it for the negatives on Discover. Overall, Discover's cashback version is great for long-time hold and grow credit strategy. You could wait a year to open the miles version or possibly another cashback version and keep churning the second Discover card you decide to open year after year, depending on if Discover will keep approving you, which can be difficult. Discover looks at a 24-month period when it comes to new accounts, so having a 25-month plan for churning a second Discover card may be a better strategy. I've held on to my cashback version for years and will never close it. Discover also offers very competitive rates on personal loans if your credit score is excellent. I get these offers from Discover at least once a quarter and usually take them up on their offer every few years. I apply the secured loan technique when I open these loans with Discover because it minimizes the interest I pay to almost nothing and rounds out my credit portfolio with an installment account which I don't always have reporting. This usually increases my score 5 to 10 points in the beginning and rounds out to a 25 to 30 point increase once the loan is nearly paid off, which is very easy to do and maintain for long periods using the secured loan technique. Discover has a pre-approval site if you're interested. There is no hard pull on your credit. Just input your info and see what you qualify for. Links in the description below. So what do you think of Discover? Let me know in the comments anytime. Hit it, Steve.